This is the Meerkat in for D7 one more time here before he comes back from vacation with the Broad Market Weekend Edition, good through Sunday, March the 26th, 2017. Well, let's take a look at the broad markets. Let's look at the daily chart, and then we're going to pull back, look at the weekly charts, and then we're going to pull back one more time since we're 3/4 of the way through the month and look at the monthly charts. So let's start with the S&P 500, the SPY here. Look at that. We were here in a symmetrical triangle after having a huge run up here in a rising wedge, which is bearish, and it broke down here last Friday. It closed below it, and then on Tuesday, kabam, the first 1% drop in the market since the election way back over here in November. We haven't had any major pullbacks. If we have, the market bought it up right away, but not this week. What happened the rest of the week? Just sitting here on low base. On Friday, it did tag this 50 moving average, and then came right back up. It was disappointment that the Congress did not vote on a health care replace and repeal act, but that's their excuse at least. So we're just doging right here right now. We're just kind of sitting here in wait and see mode. Let's take a look here at the Dow. Very similar here. Symmetrical triangle dropped down on Tuesday, and now look at that. Just sitting here, low basing. Now we have the Qs, which were on the Nasdaq. It was a little bit different situation. It was in a rising wedge, a very sharp rising wedge here, and then on Tuesday dropped down. Now it's starting to come back up, but now it's hitting its head here on the 20 moving average, the 11 EMA and the 8 EMA, kind of hitting its head there in that area. And then how about the small caps? Well, they've been going sideways all the way since December. If you look back over here, look at this. Rose up here, hit its head here right at the 138 area, kept hitting that, and then it got above it, and then used that as support. Came down, look at this. Pull back, hit its head right there again, and then Tuesday, bam, right to the 100 moving average. And just below this purple line here, that is the closing line from 2016. So now it's stalling just underneath that area there. So those are the daily charts. Let's pull back and take a look at the weekly charts here. On the S&P, we'll start with that one first. Here's the weekly. We were in a rising wedge on the weekly charts. Here's the all-time high close. That was 3 weeks ago at the all-time close on the weekly. And look at sideways, and now bam, we are down. This is the first really big down week we have had since November. And then we have the Dow, so very similar, ran up here sideways for 2 weeks, and now bam, it's pulled down. And now, but how about the Qs? Now they were running, and then ran out of gas, and only pulled down just this 1 week that we have the red. And then we have a small cap Russell here again in that really tight range here just on the weekly chart, and now we're back down here below that lower range right now. So let's take a look and look at that. It's actually negative for the year here on the small caps since the first of the year. All right, let's take a look here at Bank on the weekly chart, and then Bank here again, it was hitting its head in its tight range, very similar to the small caps. Then this week it just lost all sorts of steam and closed way down this week. And where are we at with the VIX on the weekly chart? We were down here and underneath 12 for the longest time, a couple of months. So actually since December, it did pop up. It actually tagged 14 during the week, pulled back here right around 13 is where it closed on Friday. Still in the low range. We're not by any means highly volatile, but this started some fear coming into the market at this point. All right, let's take a look here at the monthly charts. And again, these trump what's going on, no pun intended there, what's going on in the daily and weeklies. So we have the spider here, the SPY. It was high basing on the monthly charts here. And then the election hit, and 1, 2, 3, 4 straight up green candles on the monthly chart. Now we're 3/4 of the way through the month. We have pulled back here, so this could be our first red candle that we have had in the last 5 months. Again, it closes next Friday the 31st. Then we have the Dow, very similar here. 1, 2, this one, it's a red candle, but it's actually closed higher, so we did have an up candle there, 1, 2, 3, 4 in a row, and it too is pulling back slightly here. And then we have On the Nasdaq, not quite as clean on this one. So we have this run up, but now it is not quite, it's not as much in the red as the rest of the market. So it's a little bit more bullish than the other three small caps. Oh no, big red one here. It's engulfing right now. So that could be trend reversal there for sure on the small cap Russell. And again, we had a nice run up here, but now it's in danger. Again, this is not a closed candle yet, so we just have to consider that. Well, this is Mark the Meerkat. Yes, the markets right now on the daily chart is stalled after the big drop on Tuesday, and the market did not buy up again. Some concerns on the world markets are that oil inventories are still very high. OPEC is going to be meeting this week to see if they want to extend their limits on their production that they have had the last 6 months. And even with the higher inventories here in the U.S., that's possible that they might extend that for another 6 months, but we'll have to wait and see. And then, of course, there is the Congress, its failure to pass any health care legislation. You can read into that all you want. It's just everyone's opinion as to what's going to happen next. So we'll have to wait and see on that. I do not recommend getting into healthcare stocks quite yet. And then we'll have to wait and see on the rest of the agenda from the Trump administration. This is Mark the Meerkat. Trade safely and trade well.